Good afternoon this day, and welcome again to another interesting and insightful episode of Insights from Estimators Legal. This week, we are actually going to be discussing a new trend, in the world of global commerce that has to do with ESG imperatives in company law. What are ESG imperatives? Why do we have these ESG imperatives? What are the factors that have called for the need for ESG imperatives in companies? So this new global concept, now especially, is really making rounds after the COVID-19 pandemic. And it deals not only with law, but it deals with finance, it deals with investments. How well are companies responsible these days? It's not just enough to do business as usual. There's now a new normal, as everybody says, after the pandemic. There's a new normal for businesses, for companies, for international companies, for foreign investors to encapsulate environment, corporate governance, social responsibility in their ideas and ideals and values of their companies. So ride with me as we discuss ESG imperatives under company law. What are ESG imperatives? ESG is an acronym for the statement environmental, social, and governance. So we're going to dissect what that means. Environmental, social, and governance. What does that imply? Environmental, social, and governance imperatives or criteria are sets of standards for a company's operations that socially conscious investors use to screen potential investments. These days, everybody wants their money's worth to be given to them. People don't just invest blindly anymore. People don't just buy shares or bonds or stocks in businesses without actually counting the cost. Part of counting the cost now is to consider what are the environmental, social, and governance values of the company you want to invest in. So environmental criteria will consider how a company performs as a steward of nature. How do they relate with the environment? How well are they conscious of protection of the environment? We've heard of things like environmental protection, making sure the environment is green, ensuring that we're not polluting the environment. Is it a company that is going to create operations that will pollute the environment? Take, for instance, an oil business. How well are they environmentally conscious to make sure that whatever they are doing, they are not polluting the environment by oil pollution? They are ensuring that, yes, they are carrying out their businesses, but with respect and regard for the community. In terms of the social criteria, how well does company relate with its employees? What are the corporate governance values? We've heard of corporate governance, which has to do basically with the systems of rules, practices, and processes by which a company is directed and controlled. So, when it comes to corporate governance, we talk about things like, okay, how is the board run? How are the board of directors, chosen? What are the means for the carrying out meetings and all that? Those are set of rules in terms of corporate governance of the business. But with ESG, now, it's something in terms of what is the social, how well are they corporate socially responsible? I know that a lot of us must have heard of CSR, and companies still do CSR these days. But how well are they relating with their customers, with the community, with the suppliers, with their employees, with the consumers, where that company operates? And also the issue of the governance, the G is the governance. It still has to do with the corporate governance. How well is the company run in terms of leadership? What are the audits, the internal controls? What are the rights of the shareholders of the company? So these are three major criteria now that in the corporate world, in international corporate governance, ESG imperatives has now been put in for investors to consider before they make investments in any business. We're going to move forward, to dissect this further. Normally, investments in recent years, they show interest. Now, okay, yes, we want to buy stocks, we want to buy bonds, where the values are. But they have to consider all these issues of the environment. So there's something we call ESG investing. Some of us must have heard about what is ESG investing. So this is sometimes referred to as the sustainable investing, responsible investing. That yes, I am investing in this business, I am investing in this company, I'm investing, as a foreign investor in this environment because I know that yes, they have considered certain factors. And these factors has to be thoroughly considered. It's even considered by governments. And so legislations are now made by governments in their territories to ensure that ESG criteria are entrenched in company values. So what are the types of environmental, social, and governance criteria? There are three key parts, to ESG investing, and we're going to discuss this. In terms of environmental, we're going to first of all discuss the environmental aspect. So it will include a company's energy. How do they deal with the waste? How do they deal with the pollution? How are they conserving the natural resource in the environment? How are they treating the environment? There have been a lot of cases, even now, even as recent as ESG imperatives are. Very soon, there are fallouts of cases, disputes in arbitration because people are violating ESG criteria. So, how well is the company evaluating the environmental risks that any company might face? And how will the company manage these risks? Even now, when you look at the brochures of companies are now ensuring that they are putting into, even including banks, that they are putting into their brochures, into their vision and mission statements, ESG imperatives, to show you that they are a responsible company, that yes, they are in the community, but they are not in the community to spoil that community. We've had instances in certain countries where certain oil companies have gone in and they've been so careless, eroding with the livelihood of the local community by polluting the water so that their fishes are dying, things are happening, their source of livelihood is going. And these are the things that now legislations have come up to ensure that, no, yes, a company is supposed to be, an added value to any society, any community, to improve the economic benefit, but yet not to the detriment of the community as a whole. So yes, as much as the company wants to do business and make profits, the company has to be responsible. And that, in the layman's language, is what these ESG imperatives are all about. So for example, there might be issues related to the ownership of contaminated lands. How are they disposing hazardous waste? What's the company's management of toxic emissions for companies maybe that are into high technical things, that they have to emit a lot of things like chemical items? How well are they disposing these things? For a plastic company, for instance, how well are they disposing, the hydraulics that come out from their machines? Are they environmentally responsible? And a lot of times, many companies are guilty of this. What's the compliance of the companies with government environmental regulations? I'll use Nigeria for instance. Now, the Ministry of Environment in Nigeria, Federal Ministry of Environment, they are now making sure that people are more aware, companies are more aware. Companies are now being fined for environmental lapses. And it is very necessary, because if those things are not checked, then at the end of the day, a lot of other issues get disrupted in the community. And what now happens when these hazardous wastes are not properly guarded? If they're not properly managed, then pandemics still happen, health issues happen, all because the company wants to make profit in an environment that is not supposed to be. That's one. So secondly, we're going to discuss the social in the ESG acronym. Social criteria will look at the company's business relationships. How well do they work with their suppliers? Do they hold the same values as they claim they hold in terms of working with their suppliers? Are they responsible enough? A lot of companies are guilty. They collect materials they're not even paying. They don't even have the good reputation with their suppliers anymore. Does the company, do they do corporate social responsibility? What's the percentage of their profits that goes to the local community? And that, yes, some companies, especially international companies and standard companies worldwide, they engage in this corporate social responsibility to give back to the society. Some will involve in education. Some will make sure that, okay, they build hospitals in the locality where they're doing businesses and all that. Are their employees encouraged to volunteer in the community? Do they set out days and times or seasons within their financial year to make sure that they give back to the community? So do the company's working conditions show high regard for their employees? There are some companies that don't care. They just feel, yes, we are paying you and that is it. How well are they taking care of the health of their employees? How well is the health insurance? How viable is the health insurance, of the companies for their employees? Those are factors. How well do they deal with the HSE issues, the health and safety issues, to make sure that there's a safe environment for their employees, for their customers, for people who come into their businesses, for their suppliers? Are there other stakeholders taken into account? Are the interests of the stakeholders taken into account? Stakeholders are not only in any company. According to law, they are not only the shareholders that invest in the company. Stakeholders include the customers. Stakeholders include the suppliers. Stakeholders include even the debtors who are owing the company. The employees are stakeholders, including the shareholders. So how well is the company ensuring that the interests of stakeholders are taken into account in their business operations? This is what the social implies. When it comes to governance, the G in ESG imperatives, investors may want to know that a company uses accurate and transparent accounting methods. These days, you see a lot of audited accounts. They'll tell you these companies show a fair view, a perfect view, a cool and fair view of the state of the business. Yes, the company is bleeding financially. So it's not just enough for the statement of affairs to say, yes, this company, this is a perfect view, a fair view. No, a lot of companies have a fair view and yet they are under serious tax issues. We've seen that even in global trend. That a company in America almost went down. It was in the news all over. And went down. A tax company, in fact, an accounting firm almost went down because they were covering up. So investors have to look into these things to make sure that the proper accounting methods, the proper tax methods is being used by the companies they want to invest in. How well are shareholders allowed to vote on important issues? Is it just a clique of some people that, okay, yes, you can invest, we collect your money, however, it's only 4 people that decides the future of this company? Will an investor in his rational mind want to invest in that kind of business? No. So these are the issues with governance that investors also look at. The investors also want to be assured that the companies avoid conflicts of interest in their choice of board members, that they don't use political contributions to obtain undue favor treatment from those in government, and that they don't engage in illegal practice. nobody wants to invest in any company that at the end of the day, they are being accused of malpractices. And the FBI is looking for the directors all over the place. So that is very, very important. So, having discussed this, we want to go further. We will discuss some practical issues, in terms of these ESG imperatives. And we're also going to discuss bringing it back to certain legislations. I will look at the legislations in Nigeria and how well Nigeria is doing, how well the companies in Nigeria are doing now when it comes to ESG imperatives. Yes, this is a new trend. It's been on for like 2 years now. Especially, it became really, really entrenched more after the COVID-19 pandemic. And it's really a global topic because it's bringing in a lot of disputes. Because you find a situation where at the end of the day, for instance, a company comes and invests in Nigeria as a foreign investor. But because of ESG violation, the government of Nigeria has to take over the business and take control of the business of that company. And say, you know what, we are not allowing you to thrive in our environment anymore because you are violating ESG criteria. That becomes an expropriation issue. At some point in one of our series, we have discussed expropriation. Then international arbitration coming. Then it becomes the issue of the state versus that company, or the company versus the state. So there are a lot of issues, globally, and consequences of ESG imperatives. We may not be able to go into all of them majorly today, but we're going to discuss what are the regulations, what, like Nigeria government, what legislations have they even put in? We're using Nigeria as a case study now. Yes, looking in relation to what is happening in the global trend. The bedrock of the ESG-related legislations in Nigeria is the Nigerian Constitution. We still maintain the 1999 Constitution so far. Hopefully it will be amended one day. So this Constitution says that governments, the Chapter 12 of the Constitution, will always tell us that government actors exercising legislative and executive power are expected to observe and apply directive principles. And yes, some of the regulators, they've started putting in this into the legislation. We look at the Company and Allied Matters Act in Nigeria. This has been amended now in the year 2020. And now it imposes, we call it CAMA in Nigeria, which is the Companies and Allied Matters Act. Now the Company and Allied Matters Act, as amended in the year 2020, has now imposed an environmental obligation on directors of Nigerian companies. So CAMA now mandates directors in discharging their duties as directors of a company to consider the impact of the company's operations on the environment in the community where they are operating, where they are carrying on their businesses. So now, this calls for reflection that you don't just take up post and appointment as a director of the company. Whether you are a non-executive director or an executive director, you have a duty to ensure that the business of the company is not impacting negatively on the environment in the community where your company is operating. And that is commendable on the part of the Nigerian government to ensure that the Company and Allied Matters Act has been amended to include ESG imperatives. How well it is being observed in practice could be another issue, but it's a step in the right direction. Secondly, we have the Federal Competition and Consumer Protection Act. We call it the FCCPA of 2018. This is part of the consumer protection. It has actually encompassed this even before the ESG criteria issues came more into the limelight. So the FCCPA was enacted to, among other things, protect and promote the interests of and welfare of consumers. And now we see that, okay, people will say they're going to consumer protection. Maybe if there's a company, they're producing things that are hazardous. So those are what the Consumer Protection Board and Authority in Nigeria are for. So they promote the interests and the welfare of consumers. And they contribute to the sustainable development of Nigerian economy. So the FCCPA have established the Federal Competition and Protection Commission to administer provisions of the Act. And it applies to all manufacturers, importers, all those undertaking commercial activities within or having effect within Nigeria and places obligation on all the manufacturers and the importers, distributors and suppliers of goods and services. So it contains provisions that protect the right of consumers. It includes the right to have a safe, high-quality goods, the right to disclose prices of goods and services, the right to be informed in plain and understandable language, fair dealings. This is part of ESG, the S in the ESG acronym, which is the social. How well is the company dealing with its customers, with its consumers? So the Federal Competition and Consumer Protection Act has actually made room for ESG, even without their knowing. We go on to the Petroleum Industry Act of 2021, now which we call the PIA. Thanks to our legislators in Nigeria, even though this bill was on for years, eventually they passed into the act last year in 2021. So the PIA, upon its enactment in the year 2021, became the main legislation now regulating the entire oil and gas ecosystem in Nigeria. And as it has introduced a lot of new provisions, novel provisions to the industry. We go specifically to Section 239 of the Petroleum Industry Act, which empowers a body known as the Host Community Development Trust to finance and execute projects for the benefit and sustainable development of the host communities. This has actually become very imperative. And many of us, that read history, and some of us, that I heard in the news then, even though we might have been very young, about the issue of the Ogoni people and the late Kensarua, what Kensarua fought for. It was an issue of majorly environmental pollution, where a company was not responsible enough to be sensitive to the need of the local community. But now, thanks to awareness, global awareness, this Petroleum Industry Act, though albeit long overdue, eventually we now have it in the year 2021, which now gives the host communities the power to make sure that they can monitor and the projects that are supposed to be for the benefit and sustainability of their communities. So this provision now mandates operators to participate as a matter of law in environmental and social sustainability actions in the communities in which they operate. And this relates a lot to people, the companies in the oil and gas sector. We know how hazardous, the oil and gas can be if it flows into the streams, if it flows into the water, where a lot of people are drinking. Using Nigeria as a case study, we know a higher percentage of the people are still living in poor rural areas. And many of this oil that has been extracted, they can only be found in most of these rural areas, not in the cities. Then it is imperative and important for these local people to be taken care of, for their communities to be taken care of, for their livelihoods not to be eroded because of the profitability interest of a company. So this is an addition to other extensive provisions of the Petroleum Industry Act of 2021. It now mandates companies in the oil sector to protect the environment, such as decommissioning and abandonment of petroleum wells, installations, structures, utilities, plants and pipelines. All these things must now be maintained and done in a way that conforms to international best practices. That is what the PIA, Petroleum Industry Act of the year 2021, has now mandated companies in the oil sector to do. So it's not just enough. Like, okay, some companies just say, oh, we're trying to look for oil here. Oil wells, they just abandon it. It's not being done. Nothing is being done with it. They just abandon it there. And it becomes a menace to the society, to the community. Their installations, pipelines, how well are these things being guarded and managed? We all had news about even people in local community vandalizing pipelines. The companies have to be responsible to make sure that these things are avoided and everything is maintained properly in accordance with international best practice. We also have the Nigerian Sustainable Banking Principles. We call it the NSPB. So the Central Bank of Nigeria is the apex regulatory body of all banks and other financial institutions in Nigeria. And they launched the NSPB on September 24 in the year 2012. So the adoption and implementation of these principles are compulsory, and they require banks, discount houses, development financial institutions to develop a management approach that balances the environmental and social risks identified with the opportunities to be exploited through their business activities. So the Nigerian Sustainable Banking Principles have actually looked into balancing the environment and the social risks that can be identified within the business operations. So the NSPBB, as done by CBN, the central bank, now is necessary to deliver positive development impacts to society while they are protecting the communities and environments in which the financial institutions and their clients operate. This is really very important. And these are laudable legislations, by regulatory authorities in Nigeria. We have the Nigeria Stock Exchange as well, that brought out guidelines in the year 2018 to make sure that the core principles on ESG and prescribed reporting requirements on ESG performance are mandated for listed companies. What are listed companies? Listed companies are companies that are listed on the stock exchange of any country. So the Nigerian Stock Exchange have companies that are listed. These are companies that have gone public, that their shares are in the public space for people to buy. So listed companies now, companies that people have bought into as shareholders, they must make sure that issues of ESG are in their reports, in their annual disclosures, with relevant timelines. They are integrating these issues of sustainability because these are in line with international best practice. There is a lot of voice being made for making sure the environment is green. Now, very soon, cars will be made that will be using electricity. All this in a way to protect the environment, because there is the notion that fuel, gas, pollutes the environment. So now all these things is to make sure that businesses are also aware and they are contributing their quota to make sure that the economy is safe, the environment is safe. So issues about environmental, social, occupational, and community health to ensure their successful long-term business performance have to be entrenched in companies. And this, in a sense, contributes to economic development of the economy and the society as a whole. Lastly, we're going to talk about the Nigerian, lastly, in terms of the legislation, we're going to talk about the Nigerian Sustainable Finance Principles. So if you remember, when we started this discourse, I said this topic deals with finance, it deals with investments, it deals with law. And a lot of issues, come to light to make sure that investors these days are more aware and they're not making mistakes in their investments. So in the year 2021, the Security and Exchange Commission, which is the apex regulatory body in Nigeria for Nigeria's capital markets, approved the Nigerian Sustainable Finance Principles, NSFP, guidelines for the Nigerian capital market. So these guidelines were developed by the Financial Services Regulation Coordinating Committee of the Security and Exchange Commission. So the primary objective of this guideline is to ensure and to achieve a balance in the pursuit of economic prosperity while ensuring environmental protection and social development. So yes, regulators know that anybody in business wants to make profit. As much as you want to prosper in your business, you have to maintain a balance between environmental protection and social development. And this is very, very key. So the guidelines and approach are principles based on specific implementation requirements. These principles are expected to be applied by each regulated entity. So there are companies in Nigeria that are regulated by the Securities and Exchange Commission, especially if they are listed companies on the Nigerian Stock Exchange. So this will make sure that these companies, as an entity, it mandates them to fit in the right core values, the risk management frameworks. The first principle of the guidelines, which we call the principle 1 of the guidelines, consider the ESG considerations. And I'm just going to quote. It says, provides that regulated entities will embed ESG considerations into their operations and decision-making processes to avoid, minimize, or offset negative impacts. It further provides that regulated entities should put in place effective governance structures. That is the G, that is the corporate governance, and consider the impact of their operations and activities on the environment and society. Regulated entities will include capital market operators, trade groups, self-regulated organizations, and capital trade points. So these are very, very important, when we talk about businesses in the Nigeria space. So all these regulations have been impactful in ensuring that companies are more aware about environmental protection, about social development, and about corporate governance. It's not just enough to just say it in legislations. Legislations are just to guide, but it's the entities, it's the individuals, it's the board of directors, it's the shareholders that are going to make sure that these legislations are applied correctly for the good of the company, for the good of the organization, and for the good of the community in which they operate. The National Environmental Standards Regulation Enforcement Agency, which we call the NESRA in Nigeria, is an arm of the Federal Ministry of Environment in Nigeria, and they've been doing a lot in making sure that environmental protection standards and regulations in Nigeria are being adhered to by businesses, making sure that the conservation are being properly managed, making sure that the sustainable development of Nigeria's natural resources are top-notch in terms of environmental technology. It's a gradual process, but at least the interest is there. And that is the first step in making sure that the proper aims are achieved to meet international best practices. So in practical terms, investment firms, companies must follow ESG criteria down, and they must set their priorities right. Companies that are in high risk areas must make sure that they ensure the environmental is properly protected by their procedures. When we say high-risk areas, those in mining, like iron ore, coal, drilling of petroleum, tobacco, all these kind of businesses. Even weapons, firearms production, they have to make sure that environment is properly protected and they entrench the ESG imperatives in their business. They have to make sure that in terms of social development, whatever they are doing does not contravene human rights principles and the welfare and well-being of the individuals working for them, working with them, or in their society where they are operating. So in relation to the environment, companies that put out carbon or sustainability reports, it's very, very key to ensure that they are doing the right thing, considering positive ESG criteria. So for the environment, companies make sure that they put in sustainability reports at different intervals to make the environment, to make the community, to make the investors aware. Companies make sure when they want to imbibe ESG criteria, they make sure they are limiting harmful pollutants and chemicals that they are releasing into the environment, and they are containing it, even when it's being released, that it's not damaging the environment. Now companies, they are seeking to lower greenhouse gas emissions. All these things are ways in which the environment is being protected. So it's not just enough for them to just put it in their annual disclosure and say, yes, we are doing ESG criteria. No, there has to be practical steps taken. And these are the practical steps some of the companies globally have been taking to ensure that ESG imperatives are properly adhered to. Now companies are using renewable energy sources. Companies are going into solar because we believe that solar makes the environment green and is protecting the environment instead of damaging the environment. When it comes to the social, how practical can a company be with social development, being socially responsible? Companies can operate ethical supply chain, making sure that they are dealing fairly with their suppliers, making sure that, yes, they are responsible enough to pay their suppliers in time, making sure that they are not collecting bribes from suppliers. That is and maintaining and operating ethical supply chain. They have to support diversity, making sure that, yes, the fact that somebody is disabled, it doesn't mean the person cannot be an employee. A lot of developing companies in developing countries are still guilty of this. But in the developed economies, you see even the blind, people using Braille, working in some international organizations. That is equal opportunity. That is part of the social responsibility a company holds its employees, a company holds its community. Their companies also have to seek policies to protect against sexual misconduct within the organization. How well are the women treated? Are they being sexually harassed by their bosses because they're women? So companies have to be responsible to make sure that everybody is safe enough to work in the organization, whether you're a man or you're a woman. As long as you can do your work and you do your work well, there should be fairness for everybody. The companies have to make sure that they are paying fair wages. Fair wages in terms of not ripping people off. Fair wages in terms of looking